Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar seemed to come into a bit of a twisted bearish fate after looking above the 72-cent handle. The bull trap seems to have been triggered and therefore the market has taken a bit of a tumble and posted a low of 71.64. It is assessed that further weakness may come into play, but keep an eye on this RSI as we do need a little bit more support from the 3-day lookback. Now, if we see the break of the midway point, this should give further indication towards the bottom side of this 71-cent range and maybe even looking down towards its objective, which I'm still holding at this stage around 70 cents. As you can see here, we could draw a little bit of a sort of a line through here that does serve as a short-term resistance as well, and any advances above 72 should be limited. So therefore, let's see if the market, as it breaks through the 60-day moving average, also at 71.97, that the market is coming into a bit of a negative sentiment, especially with the MACD and the signal line remaining under the zero has also given a little bit more confirmation on how the bears are slowly taking control of the situation at present. Talking of bears, the market has fallen back underneath the 118 handle and now looking towards this support level, seen roughly just underneath the 118 handle and looking towards possibly around 117.65 to 85. We've not quite broken here as of yet, the RSI, but I do believe as the US dollar slowly comes back into a slightly bullish stance, could see further weakness to the euro, and therefore a move through the midway point could increase the downside and look back towards the bottom side of the range, which is somewhere, I believe, around the 117 or maybe just a little bit lower, around 116.5. With the break of 105.45 on dollar yen, the market is somewhat negative and also not quite confirmed from the MACD, but the RSI has clearly broken through, and the break of this trend does imply that we should see further weakness to 104 and reassess from there. At present, I'm still holding a slightly neutral tone to the pound due to the fact is that it broke above 130 and gave me little indication. But one thing I have noticed is that the market seems to be lacking the drive since the break of 130. So keep an eye on that as we could see a reversal very soon. Talking of reversals, well, we can see here from sterling yen that the market's struggling at this 138 handle. There is a little bit of bearish divergence. And divergence, I mean, by as price rises, the indicator is dropping, and therefore could see a bit of a turn in this cross. If we see a break beneath 137, it could lead on towards 135 handle. Well, we can see that the break of 1,926 didn't come through as strong as the bulls may have hoped, and we are actually breaking down a little into the European Open. Keep an eye on this pattern as we could be even falling back lower. Now we do need to see a break beneath 1,901 to 03 to see a close under there. Will give further indication to at least down towards this 85 region. Wait for the break because we're not quite confirmed from the technicals, and we're still at this stage maybe seeing just a small pullback before the rally, but still keep an eye on this because that surge in that Marubozu candle did lack confirmation to continue on. Finishing up with the oil outlook, well, the market's still a little bit negative after backing away from that 41.80 region and now possibly posing the threat to the downside and looking down towards a region of somewhere around $38. Still, looking at the MACD, not quite broken down, but the RSI has, so therefore could see this slight negative pattern eventually emerge. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. Hope you enjoyed a great start to this day.